Nvidia earnings are out and this thing is moving like crazy. I have the latest details from this report and what is happening to Nvidia stock. This time it was a little bit of a disappointment, I will say that. Nvidia is currently down about 3%, but there is a lot of volatility with the stock down 8% at one point. At one point it was positive, about 2%. So I do think the conference call could provide more details and give us a larger move. But one thing is clear, this is not the typical Nvidia report that we have grown used to. So I will give you just the raw numbers here first, and then we'll break it down a little more. Nvidia's revenue beat estimates by quite a bit, by about 1.2 billion. Revenue came in at 30.0 billion. Estimate was 28.86 billion, so that's good. Adjusted EPS came in at 68 cents versus 64 cents, which was the estimate. That's good. Adjusted gross margin came in at 75.7% versus estimates of 75.5%. That's good. Data center revenue, 26.38 billion versus estimates of 25.088 billion. Really good. Gaming revenue even beat. Came in at 2.9 billion versus estimates of 2.79 billion. For guidance, Nvidia sees Q3 revenue 32.5 billion plus or minus 2% versus the estimates of 31.9 billion. That's not an Nvidia-like guidance this time around. Yes, they still did raise their guidance, but it's only about $600 million that they actually raised guidance. Last quarter, Nvidia raised guidance by about $2 billion, and every other quarter before that, it was over $2 billion. So this is definitely a strong report, but weaker in the sense of those forward guidance raises are getting smaller. But I think the real pain from this report is in the margin. Nvidia sees Q3 adjusted gross margin of 74.5% to 75.5%. The estimate was 75%. So Wall Street was expecting this current quarter to be 75.5%. Great. They were expecting next quarter's margin to be 75%. Nvidia beat margins for this quarter, coming in at 75.7%. But on the low side of their guidance for Q3 margins, you're at 74.5%. So Nvidia is kind of guiding lower to a point with margins. And if you look at the low side of guidance, that could be a margin decrease of 1.2% if they come in at the low side of Q3 margins. Now, at the midpoint, the actual guidance is going to read at 75% because you take the midpoint of 74.5% and 75.5%, you're at 75%. But that's not beating estimates. That is matching estimates. And for Nvidia, that's not good enough. And that's why Nvidia is selling off about 5.5% at the time of recording this video, dragging down the S&P 500 around 0.5% here in after hours. So was this a bad report? Absolutely not. By no stretch of the imagination was this a bad report. It just wasn't the Nvidia report that we're used to, especially around guidance on revenue for next quarter and margins for next quarter. The fear on Wall Street could become, are Nvidia's margins topped out? Are margins actually going to fall from here? And how will that affect profitability in the coming quarters? Because we all know these Nvidia H100s and H200s, they don't retail for $30,000 a piece like they have been for over a year now. They are MSRP'd at between $7,000 and $10,000. So there is room for margins to start to fall here, and it's all about forward guidance. Wall Street at this point gives a rat's ass about what happened a year ago or what happened last quarter or what happened yesterday. They're looking ahead and saying margins are going to fall maybe for the first quarter in this Nvidia cycle. That's a little worrying. Now, would I be worried? No. But Wall Street, they're quite jumpy. And I wouldn't be too concerned, at least in the near term. Over the next coming years, absolutely. GPU prices are going to fall, just like semiconductor prices have always fallen. And Nvidia's margins are not going to stay at 75%. The goal is the revenue grows Sure, margins fall, but that means higher still profitability. But in the near term, yeah, Wall Street's not going to particularly love this. Now, you also had news today that Supermicro, Nvidia's pretty strong business partner, if you will, they are committing fraud, and SMCI was down about 20% today, and I think that's overall weighing on the semiconductor atmosphere or ecosystem in our markets. Now, I do think the conference call will hold a lot of details here, and I wouldn't get too caught up with what you're seeing now in after hours when the conference call starts, and then we get more of a read through from the guidance, like why is Nvidia thinking that margins might fall? Is that actual pricing pressure that could fall for GPUs, or is it higher cost, more investment? Like, why do they think margins are going to fall or could fall in this upcoming quarter, in Q3, the quarter that we are in now? I think that's what Wall Street really wants to keen in on. And this drop comes even after Nvidia announces a new $50 billion share buyback program. Although Nvidia's $3 trillion, Wall Street still likes buybacks. 50 billion, not impressive to the overall market cap of Nvidia. It's also being said that the new Blackwell chip is being shipped out and tested by some customers and partners, and I think that's going to be another big area of focus on the conference call. As Earnings Whisper says here on X, guidance calculates to earnings of 70 cents to 76 cents per share, which is in line with the consensus estimate of 71 cents per share. We actually didn't get an official EPS guidance from Nvidia, not that I can see at least, but when you do the math, it does come in line with estimates, higher on the high side than estimates, but 1 cent lower on the low side. JP Morgan said right before this release came out, the picture we get is one of a bullish retail impulse ahead of the Nvidia earnings report. The low short interest in U.S. equity indexes and tech stocks has been more of a reflection of hedge fund reluctance or inability to sustain short positions in U.S. tech stocks given their powerful rise over the past year. I think a lot of that's going to come into question now that Nvidia just, again, had not really an Nvidia-like report, at least not on the guidance standpoint. But it's also worth mentioning that Nvidia was pricing in about 9%. You've only moved 2.5% to 3% at the time of recording this video. So there still could be quite a large move to go throughout the rest of the night. The problem here is, let's say Nvidia does sell off during the conference call, which looks more likely than not at this point. That's going to put markets broadly in a bad spot heading into the worst month of the last 10 years, which is September. On average, September over the last 10 years has been negative 2.6%. And this was really the biggest event for this week heading into September. And what we found in past quarters is Nvidia tends to have a multi-week effect on our market. So if Nvidia has good earnings, it tends to lead to a multi-week kind of euphoric rally in markets. If Nvidia sells off after earnings, it can lead to kind of I don't want to say a sell-off, but a lack of performance of big tech over the next 2 weeks or so, and that can weigh on indexes. You mix this Nvidia report that is kind of underwhelming on the margin guidance and the revenue guidance, you mix September seasonality, you mix the election in there, and you really need Nvidia to say something good on the conference call to turn this ship around a little bit, or we are not setting ourselves up for a great September from my perspective. You can see here in after hours, Apple is down 0.2%, Google is slightly in the red, Meta is down 0.5%, Amazon's down 0.5%, and Microsoft down 1/3%. And of the all 15 companies that reported after the close today, they all beat top line sales estimates, which is impressive. You did have earnings from Nvidia, CrowdStrike, Salesforce, Affirm, Okta, Pure Storage, Viva, Five Below, HP, and NetApp, just to name the biggest ones. Tomorrow morning, you have Best Buy, Dollar General, American Eagle Outfitters, Ollie, Campbell's, Burlington, Birkenstock, 1800 Flowers, and a couple of others. Tomorrow and after hours, you have Dell, Lululemon, Ulta Beauty, Marvell, Gap, Autodesk, and MongoDB. CNN's Fear and Greed Index is sitting at 52 today, which is a little bit better than what you had 1 week ago, which was at 51. Yesterday, you were at 52 as well, so unchanged from yesterday. And that's kind of just right in the middle. You're almost in greed. You're pretty close to being in fear still. And I do think the next couple of days, Nvidia is really going to dominate how investors feel about this market. Tomorrow morning, we do have some data coming out as well, which you should not overlook. You have the GDP growth rate, second estimate for Q2. If that is revised lower, we're expecting 2.8%. But if it is revised lower, Wall Street's not going to like that. You are going to get initial jobless claims, expecting 232,000, the same as last week. If you come in lower than that, great. A little bit higher than that, not a problem. But if you come in like 240,000 or higher, Wall Street's definitely not going to like that. Continuing jobless claims are expected to rise about 7,000 or so. Not really a big deal unless we come in higher, like, materially higher than the expectation. You are going to get pending home sales month over month and year over year as well. That data comes out at 10 o'clock in the morning. All of the other data that I previously mentioned comes out at 8:30 in the morning tomorrow. You will get a 7-year bond auction that comes out at 1 p.m. and Fed Bostic that will speak at 3:30 p.m. And then in after hours tomorrow at about 7:30 p.m., you will get the CPI for Tokyo, for Japan. And with the Japanese carry trade that blew up recently, there's still more unwinding of that to go. The Japanese central bank has basically said, we're not going to tell you what we're going to do. We're just going to do things that we feel like we need to do or should do. If Japan, gets a high CPI report, then that's going to prompt them to probably raise rates, and that just becomes an even bigger problem. So I actually think that could be important. If CPI comes in hotter than expected, that would be a negative catalyst, likely for markets. The biggest catalyst is obviously Nvidia. Nvidia is now down about 4.5%, and this thing is going to be extremely volatile. Here today, the percent of stocks currently trading above their 50-day moving average is coming in at 62.27%. You're down about 2.7% today. So 2.7% of stocks are now trading below their 50-day moving average when they were not yesterday. Overall, you've went from about 69% of stocks above their 50-day moving average down to 62%. Little bit of weakness in the last couple of days, but there's a lot of room for more weakness or some strength here. And the interesting part about Nvidia is Nvidia has a large correlation to your mega cap stocks, but it doesn't have to have a super, large correlation to the rest of the markets. You can actually see the equal weight S&P isn't doing anything in after hours. It's unchanged in after hours. And we're looking at the RSP, whereas the S&P, the market cap weighted S&P, is down 0.34% following these Nvidia numbers. But the equal weight's not. So this could actually lead to a broadening of our markets. That's a possibility. Heading into this report from Nvidia, investors were bullish on the stock, coming with a sentiment score of 59, but yesterday it was at 72. So people were less bullish today heading into the report than yesterday. Message volume was clearly higher today, coming in extremely high at 83. Yesterday, you were only high at 60, and the participation ratio is high at 55. So let's summarize all of this. Nvidia is down, give or take, about 4% here in after hours. It was a great report. But if you look at guidance, it was not the big guidance raise that we have grown used to from Nvidia. One of the most troubling aspects, I think, from Wall Street's perspective is the guidance on margins. Nvidia actually guided for lower margins next quarter than this quarter, and maybe even, 1% lower margins or more. Why is that happening? Is that because demand is slowing down? Is that because pricing is going to come down? Does that mean they're just going to invest more. That's where the conference call is going to give us a lot of new details, and I would imagine it's probably a combination of both of those factors. But that's just my personal opinion, and that is just speculation. Heading into tomorrow, the conference call is going to give us the final move. Nvidia was pricing in 9%, so there is still quite a large move that could come from this conference call. I do think the upside is limited no matter really what they say on the conference call. Like, I'm not expecting a 10% plus rally after the conference call just because these guidance numbers were not as hot as Wall Street was hoping for. On paper, they were, but in all reality, the expectations were higher than that. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.